Bloomberg Audio Studios. Podcasts, radio, news.
Welcome back. I'm Romaine Bostick. You are watching Bloomberg Markets, but right now I'm alongside the host of Bloomberg Crypto, Tim Stenovec, for a discussion, a very special discussion about American Bitcoin, which went public earlier this month and is one of the many crypto players that have entered the public markets this year. It is also part of a surge in digital asset treasuries, reaching a market cap of almost $7 billion. But uniquely, its chief strategy officer is a son of the President of the United States. Pleased to say that Eric Trump joins us right now, alongside American Bitcoin CEO Mike Ho. Welcome to both of you.
Thank you guys very much. It's good to be here.
Having us.
Guys, no shortage of crypto treasury firms out there, no shortage of Bitcoin mining firms out there. Mike, what makes American Bitcoin different from everything else out there?
Well, we're the best of all worlds.
Apart from Eric Trump. Apart from Eric.
That's the best part, but we're the best of all worlds. We're not just a Bitcoin mining company. We're not just a treasury. We're a Bitcoin accumulator. And what that means is we use Bitcoin mining as just one layer of the strategy. Bitcoin mining is effectively, as of recent, allows us to accumulate Bitcoin at a 50% discount to spot price. As a publicly listed, actively managed accumulator, we're very different than just buying an ETF. When you buy an ETF, when you buy spot Bitcoin, your ownership ratio to Bitcoin will only ever be 1 less the fees. When you buy an actively managed accumulation company, we use all of our tools, our know-how, our ability to monetize volatility. As a public stock, we have a very volatile profile, given that we track underlying Bitcoin, and our volatility is higher than Bitcoin. So being able to issue low-cost converts that convert at a premium to where our share price today to buy more Bitcoin. Bitcoin is an asset class that has been increasing double digits for the last decade, is very highly accretive to our shareholders and increases the metric that is most important, and that is our Bitcoin ownership per share. As an actively managed company, it's using all of these tools to increase Bitcoin ownership per share.
Eric, come on in here, because filings show that you own about a 7.5% stake of the company. What's your commitment to holding on to this equity?
Long, and I've locked myself out for a very long period of time.
How long?
Well over a year, and I think it's going to be beyond that. But we've locked ourselves out, and in fact, the whole board has, and the company has. I'm damn committed to this company, and I'm committed to this company because they did everything they could to try and cancel us. They did everything they could. I'm talking about traditional finance to put us out of business. I was the guy that was getting hundreds of letters from the big banks, Capital One, JP Morgan, all of them, Bank of America. I saw Moynihan was just on, trying to take away accounts for golf courses, for hotels, for residential buildings, for doing absolutely nothing wrong. And it drove me into crypto because I realized that there was nothing that couldn't be done in crypto better, faster, cheaper, more transparently. And it's an amazing industry. You cover it well.
I've heard you talk about this before, the idea that you were debanked and your family was debanked in recent years. I just want to make sure I understand this. Are you saying that the Trump organization was not able to do business with any large financial institution at one point?
I got dozens of letters, and I'm talking about the biggest banks anywhere in the world. Again, Bank of America, right? Capital One, JP Morgan, where for no reason other than the fact that my father wore a red hat that said "Make America Great Again," and maybe sat on a different end of a political aisle than kind of the woke ideology of the time, they were sending me letters for condominium buildings. Some of these assets we didn't even necessarily own, we managed, right? A residential component in one of our buildings, right? They would send a letter to the board saying, congratulations, we will no longer bank you. It's like, well, that's not our bank account, that's the bank account of a residential building. I saw the weaponization of the financial industry, and then I started realizing how broken, how slow it was. My wife and I, under my father, right, we had 2.1% residential mortgage rates. I'd be a schmuck not to go out and get financing. We bought a home with a bank that I had banked with for 25 years. It took me 120 days to go through and know your customer, right? And you're sitting there saying, why? Why is it every week as a hospitality company, right? I'm trying to get a wire out, or I'm waiting to receive a wire through the SWIFT system, where if I don't get it out by 5 o'clock, and by the way, even if you get it out at 5 o'clock, zero chance it's making there before Monday. When you can transfer $500 million worth of Bitcoin from an iPhone to an iPhone, having a wallet address, at 11 o'clock on a Sunday night, for no fees, for practically no fees. And that scares the big financial institutions. And guys, I've always been a hard asset person. I've always been a builder of big buildings. That's what my family's known for. And had it not been for the weaponization of the big banks, I would have never found the crypto industry. It's one of the greatest things, and I am the biggest proponent of Bitcoin. I think it's the greatest asset of our time. You have an asset that's appreciating 70% year over year for the last 10-year period of time. It's global, it's instantly liquid, it's the greatest hedge against real estate, and it's been a lot of fun, guys.
And I understand your personal experience helping fuel this, but beyond your personal experience, what is the long-term advantage? And I'm talking for the broader audience out there, the broader community of folks out there, for transacting more in that space, not just necessarily with Bitcoin, but using the blockchain technology.
Such a great question. And the reason it's a great question is we have the greatest economy in the world, by far, bar none. We all know this, right? I mean, imagine, just take Zimbabwe, right? All right, where they had 10,000% inflation year over year. You go, you work your butt off, right? And all of a sudden, your money's burned. I mean, you literally get in. You actually have, crypto is going to be the greatest tool to create financial freedom throughout the world. Now, all of a sudden, instead of having that money just disappear because you've got a crooked government or you've got bad financial policy or because 100 other, now all of a sudden you can take that based on one thing that everybody has, which is a smart device now in their pocket, or just about anybody, and that gives you financial freedom. Now all of a sudden you can go buy Bitcoin, and you can go buy an asset that's appreciating, as I said before, between 50 and 70% a year, and you actually have something tangible at the end of it. Take the other side of crypto, right? Take stablecoin. You can invest in the U.S. dollar. You're in Zimbabwe. Instead of having your currency devalue by that 10,000% a year, you can go invest in the U.S. dollar. We are going to onshore trillions and trillions of dollars in the United States of America because of it, and that gives people financial freedom, and that's a wonderful thing as well for the United States of America.
Hey, Mike, jump on in here because I want to ask a little bit about the relationship that American Bitcoin has with Bitmain, the Bitcoin mining equipment provider. Representative Nunn of Iowa, Republican, calling for a federal review of Bitmain, essentially saying that that this could present a national security risk here in the U.S. Is it a national security risk for you to use this equipment?
I don't believe so. It's very proven that these ASIC chips are programmed just for one purpose, and it's for computations on the SHA-256 algorithm. And Bitmain has been a leading manufacturer. For us, it's really about the merits of the technology, the hardware that we use. We use the most efficient, the most cost-effective to be able to produce Bitcoin at the lowest cost and most efficient with the most uptime.
But I am curious, though, just on that point, though, too, Mike. I mean, is there any risk? And I mean, this also dovetails with having, Eric by your side, but is there any risk with regards to tariff and trade policies and being able to get our hands, meaning the U.S. being able to get their hands on things from there, or vice versa? I mean, just this start of this week, I mean, we came in with China putting some blocks potentially on NVIDIA and some of our homegrown chip makers.
We're really just focused on the silicone that is the ASICs that we use for Bitcoin mining. We pay tariffs on the silicone that we imported from Bitmain. Bitmain is still the most competitive and most efficient. And when we measure this latest generation of hardware, it is very technologically advanced in terms of the efficiencies. We've moved from 28 nanometer chips down to 16, down to 10, down to 5. Now the latest generation of ASICs that we use are 3 nanometer chips. The technology for the manufacturers to produce at this efficiency is very competitive and very difficult.
Eric, I'm curious how you view energy sources here, because Mother Jones reporting recently that HUD 8 buys wind power from a facility in Texas. Your father has made clear his views on wind power, and he's attacked projects, and he's stopped projects on federal lands. Do you disagree with his view on wind power?
No, I totally agree with it. In fact, the reason we're able to buy wind power for such low amounts is they built a wind farm in the middle of absolutely nowhere, and they didn't have anybody to distribute that energy to.
They were distributing it before they were selling it to HUD 8. They were distributing it to the grid. They were distributing it to Texas homes.
They didn't really have anywhere to send the power, and it was massively subsidized. Here's the reality with wind power. Wind power is a massively subsidized thing, right? The governments, go over to Europe, go over to the UK where my father is right now. The amount of subsidy, you're talking about 80% subsidy on wind farms, where the government's paying them, subsidizing the actual creation of them, and they're also ruining the landscape. Now, America, we have the greatest energy anywhere in the world, and it's untapped. We have energy reserves that every country in the world, including China, would absolutely die to have. It's just we've had bad policy where we've never actually been able to exploit that. And so I'm not a wind power guy. I think there's much better forms of energy. I'm beyond excited about the potential of actually leading the revolution in terms of nuclear again. It's something that America was winning. America was winning the nuclear power revolution, and then all of a sudden one day we just gave up on it. And then you see what's happening again in China, you see what's happening in the Middle East. I mean, even France for the longest time was winning that technological revolution. And I think under my father's leadership that's coming back. But you cannot have a strong GDP as a country if you don't have cheap, efficient energy, and we better as a country be damn committed to that task at hand.
So it's interesting, in the last couple of years, you've accumulated quite a bit of crypto. Your family's net worth has increased substantially, and now the value of its assets that are tied to crypto kind of rivals what it has when it comes to real estate at the Trump organization. You're still co-EVP of the Trump organization. Are you spending more time on crypto than you are at the Trump administration or Trump organization now?
Yeah, I spend a lot of time on crypto. I spend a lot of time on real estate. As you can imagine,
Where are you spending more?
I've got one of the greatest portfolios of projects in the world. I've got the best hotels in the world. We have the best golf course in the world. Some of the greatest commercial buildings in the city. You probably know many of them, and all around the world. And we do it incredibly well. And that's become that's obviously an incredible business. And the underlying value of our hard assets is, unlike any real estate portfolio in the world, especially based on the fact that we practically have no debt. I mean, I've spent years just paying off debt, and our cash flow is tremendous, and that's incredible. Then on the opposite side, we obviously have crypto holdings, and they're the greatest counterpart, right? On one side, you have really very little liquidity. Very few people could come out and buy Trump Tower. The asset is too valuable. There's very few families in the world or companies in the world who could afford to buy a building like that. So that means, hey, guess what? It goes up in an inflationary period like we had under Biden. It's actually very good for real estate, because guess what? Every I-beam, every 2x4 becomes exponentially more expensive. But if I tried to go sell one of those properties, it could take me 6 months. It could take me a year. It could take me 18 months. And you could have limited buyers, right? Yeah. You have the opposite side of the equation where you have something like Bitcoin, where if I wanted to sell $1 billion of Bitcoin, I could walk out of the studio about 3 seconds after this interview. I could hit, 2 buttons on a phone, and you could instantly liquidate it into any currency that you wanted, right? And so they're unbelievable kind of counterparts to one another, right? One's immediately liquid. One is 24 hours a day, 7 days a week. One you can, transact. It becomes utilitarian. You can do it so anywhere in the world, any demographic. You have another one that's a hard asset that's fixed to a certain geography, fixed to a certain city. Guess what? If there's a flight to Florida from New York, an asset in New York, might suffer a little bit more, but maybe an asset in Florida picks up that weight, right? It's why I always go out and I say I actually think crypto is the greatest instrument for people in the real estate industry because it's the perfect hedge. And it's why you see people like Grant Cardone. He's doing these walk-up buildings. He's doing kind of rental projects all over Florida. He's actually anchoring those projects, layering crypto in order to effectively buy down your effective yield on your mortgages. And I think a lot of people in the real estate space are going to get into crypto for this reason. It's an unbelievable instrument, and it's the perfect complement.
This gets to the use case, though, that I think we used to talk about in years past when it came to the advent of Bitcoin and the other crypto tokens out there. I am curious, Mike. There are a lot of entrants in this space now, and Eric was talking a little bit earlier about traditional finance. Traditional finance has finally taken notice of this as well. So how do you structure this business to not only grow yourself, but more importantly, defend off what's probably going to be maybe your Brian Moynihans or your Jamie Dimons or other folks who finally decide they want a piece of this as well?
We see that as all extremely positive. Mm-hmm. When you look at the proliferation and the rise of even Ethereum or Solana, that just means that it broadens the on-ramps of more dollars moving on-chain. On-chain benefits every crypto, and Bitcoin is not immune to that. Bitcoin will benefit from that as well. Bitcoin is the reserve asset class, whereas some of these other alternative coins are more on-ramps and they're throw-put settlement layers. But when you look at Bitcoin adoption, when you look at crypto adoption, I'll start there first. Yeah. Crypto adoption, there's about 60 million active wallets out there with a non-zero balance. I think it took Bank of America almost 100 years to develop something similar. 60 million wallets, 60 million bank accounts, and it took a lot of mergers and acquisitions and a lot of governance and permitting. When you look at BlackRock's gold ETF, it's about 20, they're coming up on their 20-year anniversary, and it's only about $30 billion. Now contrast that to BlackRock's IBIT, their Bitcoin ETF, that's almost $90 billion, and it's been only a couple of years. And when you look at total ETFs, institutional ownership of Bitcoin, that represents more than 6%. Everyone wants Bitcoin. Bitcoin's proliferation adoption is only the beginning.
All right, you have to leave it there. Really appreciate both of you coming in.
Thank you guys very much.
Mike Ho, the CEO of American Bitcoin, and of course, he needs no introduction, Eric Trump as well. And our thanks to Tim Stenovec. We'll be back in a moment. This is Bloomberg.